Hey, it's Zach with Life Insurance Academy, and I'm back today with another training video for you guys. And the training video is going to be how you can actually earn a salary in insurance sales as a 1099 agent. Now, if you value our content or you find any of it helpful, please like, subscribe, and share because you don't know how important that is to us, and we really appreciate it. Now, when we start talking about a salary as a life insurance agent, that's kind of foreign to us because we're known as 1099 agents. We're out there working for ourselves or working in our own company, and we make our own money. Now, when we think of the word salary in general, a lot of times we think of words like reoccurring or something that is guaranteed or maybe some sort of safety net for us or some type of security. And a lot of new agents that are moving into this industry, they are actually coming from maybe a salary job or an hourly job, and they have that type of comfort. And that can be one type of barrier when moving into this insurance sales. So when we talk about how we're going to be able to actually pay ourselves a salary while having the benefits of being a 1099 agent is going to be very important for us. So this all comes from the idea of a salary, where the salary can sometimes, or we think it will remove some pressures, or it will remove stress, or it will give us a sense of comfort. And it's really this relationship between time and pressure. And this time and pressure is we need to have time to learn this business. We need to have time to learn who our prospects are so we can better serve them. We need to have time to learn all of the products that we're going to use in order to serve those clients. And we also need to learn the processes and the skills and the techniques, because maybe you're moving into this like I did years ago, where I had zero sales experience and we want to lean on somebody else to provide that experience for us. But that takes time, it takes energy, it takes focus in order to learn that. And when you have financial pressures, when the pressure side of this relationship, let's say you just left another job where you had some sort of hourly or salary income coming in, or when you're making this transition over, that you didn't save enough money for this transition, or maybe you did save enough money, and this happens a lot of the cases where you just kind of get lazy in the onboarding process or in the actual initial stages of training, to where you kind of move and burn through that savings account that you had for this transition before you actually really got out of your comfort zone and started really learning the technique. Either way, whatever situation you're in here, it's going to create this time and pressure issue that we want to be able to solve. Now, either way, in all of those situations, you need money, right? And when you need money, you become desperate. You have this urgency inside of you where your focus isn't technically on making sure the client is served to the best of your abilities or making sure you're putting them in the right product. Your focus is how can I make that next dollar? How can I pay that bill? How can I provide this or that for my family? And a lot of times in the industry, when you have to sell, you can't sell. And we call that having commission breath. And the bad thing about having commission breath is all your clients can smell that on you, and you don't become genuine, and you aren't really there to serve and help them, which in the long term, you're going to be out of the business very quick if you don't solve this problem. So one thing that I'm going to show you today, I'm going to walk you guys through, is as I'm actually going to show you how you can relieve this financial pressure and actually buy yourself more time in order for you to become successful in this insurance industry, to give yourself an opportunity and a chance to be a top producer and change your family's life, and ultimately how to pay yourself a salary as a 1099 agent. So the first thing I want to walk you guys through is we have something called commissions. And the commissions here are going to go move into our bank accounts. They typically go directly from the carriers into your bank account. Now, when we start this, traditionally, we all have usually two different bank accounts. We usually have some sort of personal checking, that we go to the dinner, we buy gas, we buy our groceries with, we pay our bills. It's just our normal personal checking account. And that will be represented on my chart here as PC. And then we also typically have a personal savings account, which we hope you have a savings account where you put some money back for your family's future or emergencies. And I'm going to indicate that here with PS for personal savings account. Now, one thing I want to walk you guys through is I actually want you guys to open up two brand new accounts, one of which will be our BC, which is our business checking account, and then the other one would be our TS, which is our tax savings account. So these two accounts are just going to be normal accounts. You don't have to go open up an official business account at the bank. This is just another checking and another savings that we nickname business checking and tax saving, and I'm going to show you why. When we start earning commissions and those commissions flow through, I want those commissions to go directly into our business checking account. So we'll draw our commission dollars, and we're going to draw these commission dollars going right into our business checking account. So it's like our little pot of money here. Now, the reason we want this commissions going into our business checking account is because we want, if it's a business related expense, we want our business expenses to come out of this first. For example, this is going to be maybe lead purchases or something else that you bought for your business, or it could be a training course or which you can get that through Life Insurance Academy. But anything you're going to invest in your business, any type of business expense, we want that to be paid with our business account. For other reasons, it keeps your taxes very clean and very simple. I don't want to use the same account that I buy leads and other business expenses for, that I'm also going out and buying my daughter brand new shoes or paying for gymnastic lessons or any of these other things. I want to keep those things separate. That is still going to be your personal checking. So our idea here is we want all of our cash flow, all of our commissions to flow into our business checking account. Now, you may say, well, how do we get that money from our business checking to our personal checking so that way we can pay our bills? Because, hey, Zach, I'm in this business because I need to make money and I need to pay bills. Well, the first thing we need to do, and this is very early on, and I recommend starting this even before you get contracted. And if you already are, you can make these adjustments from where you are today, and this will make a positive impact. But we need to determine what your the amount of money you're going to pay yourself on a weekly basis. We need to determine what your salary is going to be. And how you do that, in my opinion, is you need to sit down with your family, with your spouse, maybe with your upline or a manager or somebody that has interest on your team. And if you don't have anybody else, you can reach out to me or anybody on our team to give you some guidance on this. But we want to figure out what is the smallest amount of money that you can pay yourself on a weekly or bi-weekly basis in order to survive in this business. Our goal here is to get you through the learning curve and the gauntlet of learning insurance and be a part of the 8% that is successful getting started and launched into this insurance business. Again, we know why these agents fail. It's the time and pressure. We want to give you more time so you can learn everything you need and relieve the financial pressure. So for example, if we say that we're going to pay ourselves, let's say $1,000 a week, okay? Just pay ourselves $1,000 a week. Now, that money is going to be coming out of our business checking. But if we're going to pay ourselves $1,000 a week, no matter how good we did that week, let's say we went out but you're saying, Zach, but I had a really good week. I made $4,000 or $5,000 this week. Well, that's great. So we're going to let all of that money and all that cash flow build right into our business checking account. If we sold $1,000 this week, or $3,000 this week, or $10,000, it doesn't matter. We're letting all of that money flow and accumulate inside of that business checking account. Now, no matter if I had a good week or a bad week or an amazing week, I'm gonna pay myself $1,000 a week no matter what. So how that money breaks down is I'm going to transfer the $1,000 from the business checking, and this is where it's going to be split up because now I need to tax myself that money. Every time I pay myself, I need to tax myself. So as I'm doing this and I'm paying myself $1,000, some of those dollars are going to come over here to the personal checking account. And what I recommend here is this is going to be 70%, okay? So we'll put a big O 70 so you can see it there. So about 70% of that is going to come over here, and that leaves 30%, because I recommend in your first year that you're going to tax yourself 30% on everything you get paid. From my experience, that has been more than enough, and as you move into year 2, move into year 3 of the insurance business, you can adjust that by the style of insurance you're working or how much you normally pay in taxes. But to start off, I would say 30% there, which means that 30% on this side is going to be going into our tax savings. So we have to break that amount up. Okay, so what that means is if we're paying ourselves $1,000 a week, that means $700 is being moved into our personal checking and $300 is moved into our tax savings. This occurs every single week if you pay yourself weekly, or every 2 weeks if you pay yourself bi-weekly. So that's where that money breaks up. Now, once you determine that number, and that number could be different. That number could be you pay yourself $500 a week or $1,000. But you may say, well, I'm new in this insurance business, but I'm killing it and I'm making all this money. That's great. One thing you have to realize is this money is on advances, so it's not necessarily yours yet. So no matter what you want to do, you want to continue to allow that money to accumulate, and you stay humble and stay hungry and pay yourself the minimum it's going to cost you to survive and get up and rolling, okay? Now, with that, what we're going to see is, yes, we can still pay ourselves. Yes, once we have this money accumulating in here, that $700 every week is going in here, this is the account that we pay our bills with, right? Your mortgage, your rent payment, your car payment, your daughter's gymnastics, the shoes they're needing, going out to dinner with your family, going to a theme park. This is your normal everyday expense account because you're already accounting for your taxes over here. Now, in the meantime, if you're continuing to hustle and build that income and get better at insurance, your business checking account should be accumulating and building up. So for example, we want that to keep accumulating. As that keeps building up, where we pay ourselves $1,000 a week, our business account now might have, let's say, $10,000 inside of it. And you may say, oh, well, I got this student loan that I need to finish paying off, or I only owe $4,000 or $5,000 on my car. Do not do that at all. Number one rule for an insurance agent that I tell everybody, do not pay any major debts off or take any large amounts of money and put it down payment on something in your first year of insurance, because you're operating on a 75% advance from the insurance carriers, meaning if those clients do not keep that policy, then you owe that money back. That money is technically not yours until you're outside of that advanced commission period that you've gotten advanced. So you don't want to buy something that you can't give the car back to the insurance company. So you want to make sure that keeps accumulating. But here's the magic trick. If we have $10,000 built up inside of our business checking account, what that lets me do mentally is that lets me know that I have 10 weeks. So 10,000 equals 10 weeks of automatic salary, okay? Maybe I have 5,000, okay? 5,000 equals 5 weeks of salary. 12,000 equals 12 weeks of salary. So what that does for me as a brand new agent is that lets me know that if I'm into sports and I love playing basketball still. Hey, if I tear my ACL and I can't go sell insurance or I can't go out to the field, I know for my family, I have 12 more weeks of guaranteed income that no matter what changes, I'm going to get paid the same exact amount for 12 weeks. If I have a car accident or a family in need, or if God forbid we have a natural disaster that hits our area, I know that I have 8 more weeks or 5 weeks of guaranteed income no matter what that is, because I've disciplined myself on the good weeks and the bad weeks to pay myself the same amount of salary. This builds everything we want inside of that. It gives us the sustainability. This gives us that comfort zone, that security, that safety net, that guarantee. Everything that you think you have in a corporate job, now you have the benefits and the limitless opportunity of insurance, but you also have the ability to pay yourself a salary. I'm not saying that you guys will pay yourself this amount of salary forever, because as you're getting used to this and you've earned the right to buy that time and you've earned the ability to relieve that pressure for you to really excel in insurance, yes, you should have very large weeks, and this business account should be growing very rapidly. Now, after that continues to grow, you may look down the road in 6 months or a year and a half, if you're staying disciplined, you can look at saying, yeah, it might be good for me to increase my salary, because you've earned that right to do it. But the cool thing is you still will have the ability to take some of your personal checking, which you should normally doing on a weekly, monthly basis anyways, and roll some of those back in to your personal savings and saving for your future or other things you want, such as a house, such as a car, different things like that. But also what you're going to find is when you pay your taxes at the end of the year, you're going to have leftover funds in your tax savings account that then you would be able to move over here to your personal savings as well. So what this is going to allow us to do is allow us to be smart and disciplined with our money. It tricks our mind to being broke all the time because we're only putting the money into the personal checking, the smallest amount we need to survive, while at the same time letting this monstrous amount of money in our business checking continue to accumulate and build up, which gives us that security and gives us everything we need. It buys us time to get really good at understanding our prospects or our clients that we want to serve, understanding and mastering the products that we need in order to serve our clients to the best of our ability, and also learn all the sales process for you to start continuing to build your insurance agency and build your own skill set and be the top producer you can. So check us out on the next video. Hopefully this helps you. Again, if you didn't already earlier and you enjoyed this, like, share, and subscribe. We really appreciate it, and we'll catch you on the next video.